Welcome to the Hurst Trading Room. My name is David Hickson and this is a quick video update for the 5th of October 2016. Before we take a look at the markets, please make sure that you have read and understood these disclaimers. I'm recording this video because we've received several emails recently asking about the euro to US dollar, particularly from Hurst Signal subscribers, because the picture in the euro to US dollar is really very murky. It's very confusing. Here's the 6-week view of the euro to US dollar, and you can see what I mean about it really being very confusing. We have a 40-week cycle trough over here at the end of August. Then we've got a fairly good A category interaction, then a B category interaction where price is meant to come back to the 20-day FLD. Instead, it sort of dropped below it, and it's been roughly tracking along it, but it has been really very unclear. The C category interaction, when price is meant to break up above the FLD, only lasted for a day or two, and already we were into the D category interaction. You can see up at the top here, it tells us that the current price and FLD interaction is most probably a category D. That means that according to Hurst Signals, we are currently in a short trade. So in other words, we would be in a D category short trade if we had the opportunity to actually get into that trade. Now there are several things to say. First of all, why is the picture in the euro to US dollar so difficult, and why is it so messy? Well, if we take a look at the 3-month view, you can see that the euro to US dollar has been in a very long-term triangle formation. And in fact, if we had an even longer view, we would be able to see that the triangle formation that it has been in has been even more extensive than what you're seeing on the chart at the moment. And when markets get trapped in triangle formations, cycle analysis can become very difficult, because it is very difficult to differentiate and to distinguish between the many troughs that start forming in that triangle, particularly as you work towards the apex of the triangle. You get lots of troughs and of course also lots of peaks, and they start occurring with increasing frequency. And so correctly identifying those troughs and peaks in the analysis leads to a very difficult situation. And it means that the analysis is unclear. So the important point I'd like to make, if you are a Hurst Signals subscriber, is that when you see a chart like this, and it's not looking clear and beautiful, and you know what these interactions are meant to look like, by now I'm sure you've seen many examples of perfect interactions between price and the FLD. So when you see a chart that has very poor interactions, the best thing to do is not to trade it, because the analysis is either not correct or it's simply not clear, and the movement in this particular instrument is not working very well for a Hurst Cycles trader or an FLD trading strategy trader. But now the good news is that the analysis, despite the fact that the instrument is still trapped in a triangle, there is an analysis that is beginning to emerge that looks much better, and it looks quite reasonable. And so we are going to be changing the Hurst Signal system to the new analysis. I thought I would start recording this video before we did that, because I wanted to make a point about what happens when we change an analysis in an instrument. When an analysis gets a little bit confusing on Hurst Signals, we of course start looking at it carefully to see if we can find a better analysis. We don't force the analysis prematurely, as long as the trading signals that the current analysis is giving us are still valid. So as I mentioned, the current trading signal for this instrument, the euro to US dollar, is that it is currently in a category D interaction. In other words, a short trade for the move down into the 40-day cycle expected on about the 10th of October, as you can see here. So there's the short interaction, that's a D category interaction into this nest of lows over here. I'm now going to change the analysis on the Hurst signal system, and we'll take a look at the charts and see what they are now showing us, and I will demonstrate how Hurst signals and Hurst analysis generally is a very robust system. Even when you change your analysis, very often your trading decisions are the same, and that's our guiding principle in running Hurst signals, that we don't mess with the analysis until it is necessary for us to step in, and we are careful when we do step in as far as possible to ensure that it doesn't completely reverse the direction of the trade that you would be currently in. So I'm going to pause this video now and come back to you with a new analysis. There we go. I've made the changes on the Hurst signal system. So let's just take a step back and look at the overview, and you can see what I've done. First of all, what I've done is I have pinned the 18-month cycle trough over here at the end of July. Now that doesn't look like a very impressive trough, and that is why it wasn't placed there originally, because it doesn't really look like an 18-month cycle trough. However, if we have a look at this analysis, you'll see several features of this analysis make it really quite appealing. For instance, the very even semicircles that you can see. These 20-week cycle semicircles are very nice and even. These 40-week semicircles are also nice and even. And so that indicates that the analysis is revealing a fairly good regular rhythm in this market. Why is the 18-month cycle trough so unimpressive? Well, it's because of this triangle that I spoke about earlier. There is the triangle, and in fact you can draw a much bigger triangle on this instrument. But because we are approaching the apex of the triangle, the cycles are continuing to beat, and they are forming troughs and peaks in the market. But because of whatever is causing the triangle, those troughs and peaks are necessarily going to be sort of compressed, and therefore they're not really going to stand out. I have been waiting for some time for price to break out of this triangle, and if it was to break out of the triangle to the downside, then we would have had a more usual M shape like this for the cycle. But it has been stretching so far that I actually believe that the best position for the 18-month cycle trough is over here at the end of July. Now, I mentioned earlier that we make these changes in such a way as to not really affect your trading as much as possible. And so if we take a look at the 6-week view again, you will see that, of course, the different analysis presents us with a different sequence of interactions between price and the FLD. But in fact, the current interaction, as you can see up at the top, is an H category interaction, and therefore we are also, according to this analysis, in a short trade, that H category short trade, as price moves down to the 80-day cycle trough. And so the change in the analysis has shifted your trading to some extent, of course, but it hasn't completely reversed the direction of your trade. And let's just have a look at the 3-month view and see how this change has affected the sequence, see whether this is looking like a better sequence. So here we start with the 18-month cycle trough over here in July, which I have just pinned, and we have a good A category interaction over there, which exceeded its target, as you can see, coming up to this peak, came down to the FLD, and as you can see, tracked much more cleanly along the FLD than in the previous analysis. The C category interaction gave us another big burst upwards in price, and we had a nice clean cross down for the D category interaction as it came down to the 40-day cycle trough. And that D category interaction very accurately achieved its target, which is something that we expect to see in the D category interaction. The next interaction was the E category interaction, and price came up and fairly accurately achieved its target over there. Of course, at this point the triangle formation was beginning to exert itself, and so we have a sort of a squeezed cycle shape. You can see it's sort of squeezing into that triangle, and it is possible, of course, the price will break down out of this triangle and give us a nice clean 80-day cycle trough. Or it is also possible that the 80-day cycle trough, might have been this low over here, and so it's going to resolve out of the triangle to the upside. But let's just continue looking at this sequence of price interactions with the FLD. So things are looking very good up until the E category interaction. The F category interaction, price breaks down below the FLD, which it did quite nicely over there. Then for the G category interaction, we expect price to come up to the FLD and find resistance over here, which it didn't really do. It came up above the FLD, so we've got a bit of a breakdown of the sequence over there. Although price has been trapped into such a narrow range that it came above the FLD, but then sort of kept coming down and kept very close to the FLD. So that raises a little bit of a question mark. And then the H category interaction, of course, still has to show itself. But because the cycle formation is becoming fairly strong now, all of our interactions are inevitably going to be very compressed, and so this sequence of price interactions between price and the FLD is certainly much better than we were seeing with the previous analysis. So I'm fairly confident that this is a much better analysis, and I hope that it is going to serve you well in your trading of the euro to the US dollar. What we need to be looking for now, of course, is that price will come down into the 80-day cycle trough, and then we'd be looking at an A category interaction for a long trade out of that 80-day cycle trough. We should perhaps bear in mind that the 80-day cycle trough might have occurred on, that was Monday, I think. No, it was yesterday, on Tuesday. So it might have occurred yesterday, but because of this triangle, I would be a little cautious of just immediately entering into an A category interaction. I would want to see price break out of the triangle and really demonstrate that it has left that triangle behind it before entering into a trade. Thank you very much for joining me today. I hope that you found this video update useful. Please follow us on YouTube and on all the social media channels so that you are alerted when I publish new videos.